Good afternoon and welcome to this weekly market update from MRC Markets. There's the 30th of May 2013. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss dollar, yen, Aussie dollar, dollar CAD and gold. We'll not make any trade calls recommendations in this video. You and you only are responsible for your trading. If you could please read our full disclaimer on our website www.mrcmarkets.com. For anyone who follows, we have three moving averages in each of these charts. The red one is a 50 simple, the purple is a 100 simple moving average, and the gold is a 200 simple moving average. We'll mostly be focusing on fib retracements in this video, as that's how I personally view the market. It really gives a nice sort of framework for the market. Okay, and here's the euro dollar charts. This is the daily. What has been going on since the last video? To be honest, not a lot. It's been really choppy, as you can see on this daily chart. What we spoke about in the last video was these two fib setups that were still in play. So we had the one from highs to lows there, 50% sellers coming in trying to bring this pair down, and we also had the one from these lows and these highs here, buyers trying to come in at 50%, but they sort of failed to come in, and we just got a nice close below the 61.8. It's just been chopping around really. But what is interesting, as you can see here, the 50% which previously acted as support then acted as resistance as soon as we came back and closed below. So it did initially rotate up here to the 0% line, but it failed to break above and hit that 123.6% extension target. So yeah, we're below here, and now this, so if I'll zoom in here so you can see a bit clearer, this 50% is now capping this with the 50 SMA as well. So really technical stuff going on here on this euro dollar chart. Also, another thing we have, so that's the two key ones. So basically there's one in play now, in my opinion, on this daily chart, and that's that one there, from the highs to the lows. What's the date on that high? It's the 1st of February high to the 4th of April low. And yeah, they're trying to press that down. So the lows there at one spot, 27.46. That's the 0% line. It got quite near that. It got about 50 pips away from that. But it's just having a slight relief at the minute, but the 50 SMA is capping. It's very technical stuff there. The other thing that we got on this 4-hour chart though is this fib here, from the highs to the lows. Bam, sellers coming in at the 50%. It is also, if you look at the more obvious high, I suppose the high of the chart, if you draw 38.2, actually I'll do it for you, that is also capping. So some people say it's the 50%, some people say it's the 38.2. There you go, it's coming in there. Slightly lower down, but you can see all those spikes that have come through it, and the candle's closing below. It is trying to close above at the minute though, but it's still a massive upper wick there you've got there, off that 200 SMA as well on the 4-hour. So really technical stuff there. I wouldn't be surprised to see that close below and then press lower. We have got US GDP out today, so that could be the catalyst for a nice little drop in this euro dollar. Wouldn't be surprised to see that happen. Of course, it could be poor data and the euro dollar could rip up, but wouldn't be surprised to see it. And the amount of times we've seen fundamentals coincide with the technicals, wouldn't be surprised to see it be a big number, and we press lower in this euro dollar. Cable chart, the same thing's been going on really on this on the daily. So we've got this big fib here, so I'll just delete the 38.2 now, as I don't look at it that often. So we've got the sellers coming in at the 50% level here at a 1.56 handle pretty much. 1.5603 came in pretty much to the pip. Really technical action. It's really technical action there. Sorry, it is the 1.50. Well, it's pretty much 1.56 bang on there. One tick lower. And yeah, the sellers are trying to press this down to the 1.4830 is the first sort of target there. The other setup would have been from the lows to highs here. We may have spoken about this in the last video. That sort of failed. We got two daily candles there So we did initially get a reaction there, 2 daily candles, but then surprise, surprise, we got capped at the 50 SMA, and that has brought that lower. We're now below the 61.8 here. It's spiked above, but it's trying to hold there. So the sellers are definitely winning this battle here. If we flip it to the 4-hour, nothing massively interesting. It's just been chopping down, really selling off, brief retracements, but sellers coming in. It has got above this 50 SMA though, so maybe it does want a brief little rally. If we flip it to the 1-hour chart, wouldn't be surprised to see buyers coming in here thinking it's due a retracement, and coming at this smaller fib setup here from the lows to highs. But you'd be a brave man to buy this pair at the minute, as it has been very bearish indeed. Dollar Swiss chart. You can see I'm going to flip to the weekly actually, because it's quite clear on the weekly. So we had this first fib set up here from lows to highs. Bam, came at the 50% and 61.8 zone, rotated higher, and that hit all the targets. So now the next one I'm personally looking at is from that low there to that high, and you can see this. You see it a bit clearer on the daily. So yeah, that was the first one there, which we spoke about in the previous video, from lows to highs there. The 61.8 got bought up. I mean, yes, if you had tight stops, you probably got stopped out there, to be honest with you, but if you kept them some decent room, then that did play out to the 123.6. So what I'm personally looking at is if you drag the highs up, and if you look from the low of that fib move from lows to highs there, the 50% comes in at 0.9521. So that's what I'm personally, and that's what I'm really interested in, to be honest with you, on this chart. I mean, yeah, if you look at the 4-hour, maybe you could look at this dip here, which is currently getting bought up. That maybe be the correct one. That's the 50% comes in at 0.9585, and that is currently acting quite nice. So maybe that's the one to look at on the 4-hour. But I personally prefer the more obvious one, because if you look at the daily, that's not really an obvious dip for me. I prefer the slightly bigger, more obvious one. But hey, that could be the one to play. In fact, I wouldn't be surprised to see if this is a 38.2. I should check that. I always like to know. Yeah, it's surprise, surprise. So the buyers are coming at the big 38.2. Really, I wouldn't really say it's the. I mean, yes, it is technically 50%, but it's just going. It's a bit of a coincidence, in my opinion. This is the obvious swing low, and it's getting bought up at 38.2. Plenty of candlestick spikes. There's 3 spikes there, and it is holding above currently. So that's what's going on the dollar Swiss. Dollar yen's been a pretty boring chart, really. The last few weeks. I mean, yes, it's just been chopping around, especially these last few. Yeah, pretty much the last couple of weeks, really. But what's going on though is this dip here from lows to highs. So I'm just delete 38.2 again, so you can see it a bit clearer. This is getting bought up off the 50%. It got front run. If you front run it by about 10 pips, then you'd be in. So we're holding above this key 100 level, and that's the setup, which is in play. A nice little reaction there, to be honest with you. Still really is trying to rip up. On the 4-hour, nothing massively of interest really. It's just the same setup as the daily, so that's the key focus for me on this dollar yen chart. Aussie dollar's been really interesting. If you look at the weekly chart, I posted this fib up on our Twitter feed, the @MRC_markets on the weekly. Really interesting support zone. This is 0.9575 level. 1, 2, 3, 4 tests now. This is the 4th test. I wouldn't be surprised to see it break lower, but of course it could still hold and rotate higher. But if you imagine it as being like a floor, the key, if you stamp on it 4 times, it's more likely to break, really. It's like bashing a door down. The more times you bash it, the more times it's likely to break. So similar sort of example here with this Aussie dollar, but of course it could hold. There's nothing stopping it holding. And if you look at the daily, we had a nice little daily candle off it yesterday actually. So it could try and get, I mean, to be honest, it has been a very aggressive sell-off, so I wouldn't be surprised to see some sort of retracement. You could perhaps look at this fib here from highs to lows, or maybe even this one here, that one there maybe. So we're still a long way away from the moving averages, so ideally it should, the price does tend to like to come back to the moving averages, so maybe the parity level actually could be a decent one to look at. Yeah, the 1.000 handle. Wouldn't be surprised to see it come back there and test it, but that's really all I'm focused on this Aussie dollar chart, in my opinion. Until we get a decent retracement for sell opportunities, then it's nothing massively going on, in my opinion. Dollar CAD, however, has been the really interesting chart of the week. We've been posting this up on Twitter a lot. It's basically just a 50% retracement staircase, really, with the first one here from lows to those highs there. Bam, 50% rotated higher, hit all the targets. So if you then extended your low to the bounce of that 50%, looks at the new high there. Bam, 50% rotated higher. And then if you looked at the new high there, the new low, bam, off the 50% again, rotated higher, and again. So number 4 off the 61.8 this time, sorry, rotated higher, and now this one is currently in play again off the 61.8 actually. So if you had decent stops below, left it plenty of room, then you'd still be in. So yeah, and it's currently rotating higher very nicely indeed. You can see that clear on the 1 hour chart there, or even off the 4 hour. So very nice action. Also that 50 SMA there, so wanted to come down. That's why it broke a little bit below the 61.8. Wanted to come down to that 50 SMA, and it's now pressing higher. So it's all about just buying the dip, in my opinion, on the dollar CAD. Really technical chart there, and that's why I personally look at the fib retracements. Okay, it's done for the forex. Let's have a look at gold, which hasn't been an interesting chart, especially this last week. You can see these daily candles just going sideways here. But what I do think is, I know I'm not going to sharpen that chart. What I do think is quite interesting is this 50 SMA has been holding quite nicely up here, so I wouldn't be surprised to see it come up and test this 50 SMA up here, which is around the 1448s level. We spoke about this in the last video, that the fib there from the highs to lows, the sellers coming out at 50%, trying to bring it down lower to the 1321s. But I think just after such an aggressive sell-off, it is due some sort of retracement, so there's nothing massively of interest to me, to be honest. I think there's much more interesting charts out there, i.e. the dollar CAD. But it is making higher lows here. So it looks like it's just going to try and grind up for a bit, and then the sellers will probably come in and push it back down. I'll be surprised to see that. But yeah, that's the focus really on the gold chart. Okay, that's all for today's video. Hope you enjoyed that. Hope you found it interesting. If there's any other page you want to have a look at next week, then feel free to comment under our YouTube channel, or give us a tweet, our Twitter feed at MRC_markets. Don't forget there's the US GDP out today, so that will likely move the markets. That's at 1:30 GMT. Okay, thanks for listening. Hope you found that interesting. We'll catch you next week. Take care.